Hey there, Dale.
Well, good morning. How are you?
I absolutely cannot complain. Dale, we were wrong last week. We
So,
said things were gonna hang steady and there wasn't really gonna be any change until the Federal Reserve rate cut, right?
well, this is the kind of wrong being that I like.
I agree. Well, let's jump into a little bit of it. Last week we were looking at the chart right here. Mortgage-backed securities, green and up is good, red and down is bad, and we stagnated. Really small motions. Whenever you see small motions on this chart, it just means kind of nothingness. But we had a little drop and then a really big rise. We are entering the best rate environment in the last 2 years right now, which is kind of amazing, really phenomenal. And this is still before the Federal Reserve has even announced a rate cut of any kind. So this is really, really awesome. Dale, how is that translating over to mortgage interest rates?
Well, but they are coming down. And of course, next week we're going to see this even lower because this 6.5 reflects last week's numbers. So
Exactly.
I'm guessing 6.4 ish, you
Yeah.
know?
Yeah, we're definitely moving into a much better territory with interest rates. It's very exciting. Let's just jump into why. It's the Bureau of Labor Statistics blunder. We're going to keep this short, not because there isn't a lot to cover. We just don't want to get in trouble, politically speaking. So we're just going to lay out the facts and we're going to move on from it.
Right?
But payroll growth for March 2024-2025 was revised lower $911,000. Okay, that gibberish basically means 52% of all the jobs that were stated to have been created in that time period never were. They never materialized. Again, let that inform your own decisions. Don't let us inform your decisions. But this has basically cemented the rate cut. It is undoubtedly happening. And now we are hearing whispers of maybe even a 50 basis point rate cut coming this September meeting, or at the very least a 75 bips rate cut by this December of 2025. How do we know this? Well, this is the betting market. These are the future predictions for the federal funds target rate. As you can see, our current section right here, Dale, I mean, there's one person, if you look really closely, one person thinks we're going to stay here, but that's likely not going to happen. Originally, most of the market was betting here, but as you can see, I mean, undoubtedly, we're starting to get to a point where we're seeing 2 or 3 25 bips rate cuts by December 10th. So that sounds quite phenomenal. It sounds
Yeah.
really awesome. I think we're going to get that. And day by day, we're starting to see a lot of people gamble a little bit further on interest rates. What I mean by that, if we go all the way back to mortgage-backed securities, lenders are pricing way more aggressively right now just because of this news. And nothing happened. The Fed they didn't say anything yet.
Right.
So, Dale, do you have anything to add?
I just think it's phenomenal that nearly 1 million jobs that we said were created really weren't. And boy, this rate cut could have been really a good thing a year ago, but it is what it is.
Right. I will say this one last thing. Whenever it comes to jobs, they're an indicator of recession. And this data is between 1.5 to half a year old. Okay, from March 2024 to March 2025. As you said, if we had this corrected data back in those time periods, we would be much closer to understanding that we are or have been in a recession all the way back then. The Federal Reserve should have acted then. And now we're kind of at the point of hindsight is 2020. I think we need to change some things now. So hopefully this trend continues. Hopefully the Federal Reserve makes a good rate cut next week. We'll be the first to update you on it. But if you haven't contacted your buyers yet, now is the time. because the moment the Federal Reserve waves their magic wand and the headlines start appearing, the crowded buyer's market will impact all of the offers you can make. Right now, you get your buyers in with these benefits on the interest rates. They're going to shop free and clear because there's no other competition.
And remember, escrows are typically 30 days long. So by the time we get to the end and we lock in that rate, might even be a little bit better. So, it is time.
All right. Well, Dale, thank you so much. Hope you have a great one.
Thanks, you too.